In this video, I have a special guest, Lalit Devraj, a cryptocurrency enthusiast and authority. We met at FinCon 22 and he's been active in the crypto market since the early years. And I've brought him onto my channel today to share his outlook and answer some newbie crypto investor questions that I have and maybe you do as well. By the way, neither of us are investment advisors and this isn't financial advice. Welcome, Lalit. It was great meeting you at FinCon. Can you briefly tell us about your channel and what cryptocurrencies mean to you?
Thanks for having me on, Noel. What's going on, everyone? My name is Lalit Devraj. I've been posting videos here on the platform about finance, personal finance content for a couple of years now. In terms of cryptocurrency, I've been involved since the early 2010s. Overall, cryptocurrency to me is the ability for everyone to interact with each other, to have that medium of exchange. And in general, in the long term, assuming everyone has digital access, there's a way, minus government intervention, where there's a way to say, hey, I don't know you and you don't know me, but we have this central cryptocurrency, whichever coin it is or type of system, we're able to interact with each other and have some level of assurity, security, and a way to say that, hey, we can deal with each other and innovation can still happen in the future.
I completely agree. Cryptocurrencies will be a dominant medium of exchange in the future. Let me ask you this, Lalit. Cryptocurrencies have been on a roller coaster ride, and the ride down in 2020 has not been fun for investors. What do you see going on, and where do you think the crypto markets are headed in the near future?
Crypto markets at the time of this recording have definitely been tumbling downwards. From my personal perspective, I look at it like the interest rate environment, where given the pandemic and given easier access to a lot of cash and liquid money, there was a lot of money being circulated within our economy. Now, it's not to say that America is the #1 investor in everything crypto, but if you do look at the actual hard numbers from institutions and hedge funds and the amount of money going into the crypto markets from their side, essentially it's very correlated, almost as if the stock market and crypto market were more in tandem than not compared to many previous years in general. This being the case, as interest rates rise and the cost of borrowing this capital actually goes up, there may be certain liquidations that happen in the crypto markets to pay off the fiat actual agreements and terms. This is to say there was a lot of borrowing at the top, and as we wrote it down, whether you call it a margin call or the fact that, hey, I was buying, let's say, Bitcoin at 60,000 plus, and now it's sitting around 20K, what's gonna happen? Do you sell? Do you still pay back as if you wanna own that asset? Do you just let everything go and just forget about it? So this downward spiral was just activated by many activities, but interest rates as a huge catalyst for the rapid change in everything, because interest rates have been moving rapidly.
Yeah, I hear you on that. Higher interest rates present a strong headwind for cryptocurrencies. It's been a very rough year. How are investors like yourself handling losses? At this point, is it worth it to sell and take the tax loss and hopefully buy back at a lower price, or just ride it out if you haven't yet?
In the near term, I would say that with Bitcoin staying around this 18, 19, 20K at the time of this recording, yes, there's a possibility that it can go downwards. Yet at the same time, it's a decent support level. Yet overall, I would say that a rough year can be rough on paper, essentially a paper loss, but until you actually sell, that loss is not incurred. Some ways to offset these type of losses would be, let's say that you have 5 different type of coins arbitrarily. Let's say 3 of them you're just kind of break even on, and the other 2, one of them you're up 50% and the other one you're down 25%. You can offset some of that loss with some of the gains from the other position you have, assuming that the amount invested was similar. Yet at the same time, depending on when you got in, if you bought everything at the top, chances are if you're following the overall crypto market, you're going to be red all across the board. So what do you do next? Similar to a savings account, there are certain exchanges that offer X amount of APY, 5%, 6%, 8%, like this. Now, this is a way to say, okay, hey, at least I'm getting 8% of the same coin, and that way I'm offsetting my loss. Yet at the same time, there's been recent news of these coins not being yours. So another way I hedge basically the losses is this. When it comes to Bitcoin and Ethereum specifically, I do trade options. I'm a seller of options, so I'll be giving the option for somebody to have my coins at a certain price at a future date, and they'll give me some amount of premium up front. It definitely depends on market conditions, but this is the way I do it. There are other ways, for example, DCA, dollar cost averaging, and using techniques which are more normal and expected as a long-term investor, and there's nothing wrong with that. It's the best thing we can do, and as the ebbs and flows happen, when there's another boom and a moon and a rise, definitely you'll be better positioned because your average cost hopefully would be a lot lesser than, let's say, if you bought at the top overall.
Very good information. So You talked about staking and lending your coins as a way to offset some market risk, as well as dollar cost averaging, which I'm a big fan of. And as you're well aware, the dreaded wash sale rule does not currently apply to cryptos, but I think that's going to change in the near future. So community, be sure to like the video and our channels so that you don't miss any important updates. Lalit, I know that you somewhat follow Gareth Soloway. He's had some really good predictions, and more recently predicts that if the US dollar continues to strengthen, Bitcoin could go down to 13,000, even 3,500 as a worst case scenario. That is, if Bitcoin follows a dot-com bubble scenario. Any thoughts on that?
Gareth Soloway. It looks like Bitcoin could be going down to 12 or 13,000 and as low as $3,500 is what he's saying, similar to the dot-com bubble of where everything crashed basically 95%. It's definitely a generalization, and I would say when it comes to FUD, fear, uncertainty, doubt, in the worst of times when things are down, of course, that extra negativity, it's easy to feed into, and otherwise, we don't know what the future holds. He's one person, I'm another person, you may listen to someone else, and everybody's not really gonna know the future, and that's the honest truth. What I personally think is, I don't see it going down all the way to 3,500. I don't even see it going down to 12 or 13K. Again, just someone on the internet. And the reason is there's enough money invested by, let's say, the bigger institutions that it wouldn't really make sense. From a story perspective, it would make more sense if maybe there was a flash crash, similar to what we've seen with Bitcoin in general. Maybe it goes down to that level for, seconds or minutes, but not longer than that, unless there's a true reason for cryptocurrency to fail overall. If you look at the overall market, there's always a decent support, and I'm referring to Bitcoin here. And if it goes below a certain support, usually it doesn't stay there for long. To put it in perspective, if Gareth Soloway is saying that it goes maybe to 3,500, then once we get to 3,500, is that the perfect time to buy? Or is someone gonna come out and say, it's gonna go to zero? If you see where I'm coming from, it's probably better to average in and go on in the long term versus just waiting for that perfect moment, because mathematically speaking, you're better off reaping more gains. You'll have more invested overall if you average in versus that one-time buy of this lump sum of money where you may time it wrong. And if you time it perfectly, great. But what are the chances to perfectly do it on every single dip? We're all just humans, including myself.
Good point about a flash crash scenario, which are like blips on a screen and you're not actually able to buy it because it's at that price for just moments. Just to be clear, like you, Gareth Soloway is a big proponent of dollar cost averaging into Bitcoin, and his calls from what I've seen have been pretty amazing. For example, when Bitcoin was at an all-time high over 60,000, he was predicting a strong pullback to around 20,000 would happen. Everyone thought he was crazy. What would you say to someone who isn't invested in crypto but is maybe curious? I mean, cryptocurrencies have no intrinsic value except for maybe the technology. Many coins have gone to zero and have become worthless.
If you're new to everything crypto from an investor perspective, regardless if it's Bitcoin, Ethereum, or any other type of altcoin out there, the best advice I've heard is the following. You've probably heard this, but invest any amount you're willing to part with forever. I don't agree with the sentiment overall because it's kind of fear-based or kind of I don't care-based where, hey, if my money grows, it grows. If it doesn't, oh well. So this is the second part of that to make it basically the best advice I've ever heard. And it's this. If you have 100% of your portfolio, if you're putting 10% of your portfolio into crypto, if 10% of your portfolio goes to zero, it's okay. You still have 90% riding, growing, or whatever you expect it to do. It's gonna hopefully be there. Where on the flip side, if that 10% goes up 10x, you basically doubled your overall portfolio. Where that 10% becomes another 100%, you still have this 90% which is hopefully grown, and overall you're looking at a huge bigger pie than not. Your downside risk doesn't seem as bad and your upside gain seems that much better because that's just how crypto is expected to grow in the long term. It's all speculation, so if you don't see your money again, it's probably expected, but I would put it that it's actually the other way. If you really think something's gonna 10x, then why wouldn't you put maybe 50% of your portfolio? Why not 100? And a lot of folks do this. There's nothing wrong with it if you have nothing to lose, if everything else outside of that investment portfolio is super safe and super good. It's all individual to individual, personal finance, but just some food for thought.
That's really good advice. Let me ask you this. At this point, I'm not a crypto investor. I did own 5 Bitcoin back in 2015, but I sold it a year later due to lack of patience. It pains me. For those like myself looking to get into cryptos, is it better to use a third-party exchange like Coinbase or Robinhood, or holding them personally in a private off-ledger wallet?
If I was totally new to crypto, I would do two things. I would deal with a centralized exchange like Coinbase or Gemini, but that's really contingent on how much money you have to invest. If you put in, let's say, $100 or $1,000 or some amount of money that you're like, hey, this is something for me to learn the motions, to learn how this goes, because on these centralized exchanges and platforms, they basically give you the opportunity to learn, to see the overall market. They have other features that benefit your learning journey and how much faster you can learn along the way. From news to other trends in the market, there will be features that can definitely benefit you, but if you're putting a significant amount of net worth or something you're not really happy with just disappearing into thin air, especially due to recent news of these centralized exchanges just shutting down / going bankrupt, then I would say the following. You can keep your wallet offline as well, where it's essentially on a USB where you have a private key, not connected to the internet. And this way, you may not get any extra interest or whatever features those type of exchanges offer, yet it's safe and sound, you know where it is, offline, etc.
Yeah, the risk of losing your crypto coins to a third party, getting hacked, or going bankrupt is definitely scary. As far as exchanges go, which one do you think is the most solid for the average unsophisticated investor?
Coinbase and Gemini are definitely great, and they were great a few years ago. But if I was starting fresh today, I would definitely recommend FTX.us, not sponsored or anything. And they're just a great platform because all these exchanges that have gone bankrupt of recent or otherwise, they've been basically bailed out by FTX and their team. So the capital and the breadth of control FTX has in general, there's more confidence in FTX.us and FTX overall than not. And it sounds obvious, but never put too many eggs in one basket in the usual. So just limit your mental risk exposure to how much you'd be affected, regardless of that dollar loss. Protect what's up here, because this is what's needed to make that next decision.
That's interesting. FTX.us. Never heard of them. I'll have to check them out. How can someone best get a hold of you?
Noel, thanks again for having me, and to the audience, thanks for listening to what I had to say here today. Hopefully it was helpful, and if you ever want to know more, I'm sure Noel will leave a link to my channel in the description below. But with that, thank you very much. Take care.
Of course, please go down to the description and find the link to Lalit's channel. Thanks, Lalit. That was really informative. If anyone has any questions for myself or Lalit, please leave it below in the comments. We didn't talk about this, but cryptos and taxes are a huge problem area if you're an investor in cryptocurrencies. Check out my video here where I explain what you need to know about cryptocurrencies and taxes. Also, don't forget I have a free Facebook group where you can reach out and connect with experienced crypto tax professionals. Link is in the description.